Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is February the 19th. It is early on Saturday evening, and I thought I would take a little bit of time to talk about Oxy. It's Occidental Petroleum's Q4 2021 results coming up, which is also going to give us the full results for the fiscal year 2021. So it's Oxy on deck, and I thought what I would do is just take a little bit of information that I can gather, find and share with you, and maybe we can have a discussion in terms of where Occidental is going and what the future holds for us as Occidental shareholders. So I've put together a little bit of information about Occidental Petroleum, and very specifically what I'm looking to do is kind of move away from the concept of people like you and I having to do our own homework in this particular instance for the next 5-6 days or so until Oxy reports, and maybe look to the experts and the people who do this for a living and see what they say. Whether they are right or wrong doesn't really make any difference, because you're going to see as we go through this presentation that there are varied opinions, and they actually vary quite dramatically depending on whose information it is that you're looking at. So what we're looking at here is Occidental Petroleum's earnings estimates and actuals by quarter. Now, what you have on this graph here is a sort of a scatter plotting that gives you this light blue sort of variable wave here, if I could put it that way. And then I've highlighted on the right-hand side here for you Q4 in terms of where the, let's call them the smart people as opposed to the schmalists. This is the area of predictability in terms of where they think Oxy might end up in terms of earnings for Q4 of 2021. As you can see, if you look over on the left-hand side, you can kind of see on the y-axis here what these rows respectively represent. And then if we look back at the column over here, you can sort of cross-tabulate and say, the low end is here at -50 cents, and the high end is here at about $1.25 or so. And then we see the blue uptrend as Oxy has reported over the last few quarters or so since that major crash, which impacted everybody negatively in Q2. And in the case of Occidental Petroleum, was just exacerbated from the decline that Occidental was already suffering as a result of taking on too much debt. In terms of that ill-timed acquisition of Anadarko. Was it a good deal or a bad deal? You know, the jury is probably still out on that one. I think at the end of the day, you might think if you look back maybe in 5 or 10 years from now and you look back at the deal, you might say that was a smart move. Right now, we're still sort of in that in-between stage where it's difficult to see whether there's light at the end of the tunnel, but we're seeing more light at the end of the tunnel as the train proverbially progresses through the tunnel. So things are looking better all the time, especially as it relates to long-term debt, in the complemented by high energy prices, and in addition to that, complemented by a supply-demand curve that certainly favors us in terms of energy investors right now, of being energy investors right now. Occidental Petroleum's earnings history by quarter makes an interesting picture. The consensus estimate here, $1.10. We're looking towards February the 24th. But look at the upline here. If you look at the reported earnings per share, and here we go back all the way to August of 2020, when they came in at -$1.76, and up to last quarter, which was Q3 2021, when they reported 87 cents and handsomely beat the consensus estimate by 21 cents on the EPS score. And then if you look at revenue, you have exactly the same picture. And this is interesting, guys, because what you have is the uptrend in earnings per share is a little bit more vague than revenue, because revenue is revenue. And in this particular instance, revenue is very much dependent on high commodity prices, and Oxy has been benefiting from these very high commodity prices. And don't forget, even the fact that it pulled back over the last week and maybe a week and a bit or so, we're still talking about West Texas Intermediate at like $90 in terms of where the futures are selling at for late March. Look at the revenue uptick. You go back to 2020, August, and they reported just about 3 billion. And then in the last quarter that they reported, which was Q3 of 2021, almost 7 billion. I think we cross over that $7 billion mark for Q4 2021, and quite easily so. But here's where it gets really tricky, right? So I went to NASDAQ and thought, let me see what the analysts are forecasting for the quarter. So what's interesting about this is you can see it's very mixed. And let's just go through this for just a second. The analysts are split, right? So for the fiscal quarter in December 2021, 4 people say down, 3 people say up. Fiscal year, December 21, 3 people say down, 2 people say up. So it's kind of like 50-50 or thereabouts, more down than up for sure, but not by a large margin. It's just sort of one analyst being more bold than the others in terms of where they think it's going. Of 7 analysts making quarterly forecast, 3 raised and 3 lowered the forecast. So now this is where it gets really tricky, right? Because if you say, Mr. Oxy, what are your estimates for Q4 of 2021? Maybe the honest answer, for the sake of transparency, is much like you, I just don't know. If the smart people are 3 raised, 3 lowered in terms of quarterly forecast, then it'd be very bold to make a prediction that counters either of those 2 positions. The earnings estimates here, we have 21 analysts covering with an average estimate of $1.11 per share, EPS of $1.11 per share. There's some smart people on this channel like Dr. Yeti Zhang. Hey, Yeti, if you see this video, maybe let us know what you think in terms of EPS. Kevin Zhao is another guy who does some really good, astute analysis. It'd be interesting to know what you guys think. The revenue estimate, we have 10 analysts, which is interesting in itself, right? 21 are predicting earnings, only 10 predict revenue. Maybe it's because revenue is relatively easy to predict, whereas earnings per share is certainly much tougher because of all the variables that go into calculating that particular metric. Average estimate on revenue, 7.32 billion. I think Oxy blows by 7 billion very, very easily. And I have a feeling, and it's just a spidey sense, a bit of gut feeling. I think Oxy is going to beat this $1.11 earnings per share estimate. What about our friends at TipRanks? So they give Oxy a 17% upside here with a target price of around $46, the average target price, that is. The high someone's is bold enough to go to 60 and the low 34. Well, we're not too far away from 34, but we do have a nice upside to go to. If we go from our current price, which is about $39.50 to about 46, that'd be a nice position to be in. And we got 13 analysts here. 9 of them are saying buy, 3 of them are saying hold, and 1 of them is saying sell. So I am not an analyst, but my position right now is a hold. I would not be buying Oxy at $40 right now. I certainly, 4 days into earnings, am very comfortable holding my position. I have several thousand shares of Occidental Petroleum that I'm long. So we'll see how we go. But 9 of them are saying buy, 3 of them are saying hold. So I guess I fit sort of in between those buy and hold group of analysts. I am definitely not in the sell camp. There's no particular compelling reason that I see for us to sell Occidental right now, especially, just a few days, less than a week before they report earnings. I looked at the insider transactions. I was looking everywhere to see if I can get some kind of guidance to get an idea of where it might be going for Q4. And of course, immediately I like the fact that there was 7 buys by insiders or executives or people deemed insiders under SEC regulations. However, all those buys are uninformative insider buys. And what that means, guys, is simply that the executives have a variety of different stock plans, which is part of their compensation. And executive compensation very frequently includes things like stock options, restricted share units, restricted share awards, tandem shares, share appreciation rights, performance shares, etc. There are many, many ways in which executives are compensated. And if those executives receive those shares or that stock as an award for performance or because of the company's performance or whatever the performance criteria might be, or otherwise it's just a basic derivative like a stock option where you say it has a future dated price and it is available for exercise at a certain date. That's the most basic form of a derivative value. If you're receiving stock options, when those stock options vest, you can just elect to either cash them out, buy them at whatever the price is, the strike price that they were issued for you. But what they very frequently do is they do a sell to cover, which means they sell just enough of that stock in order to pay the taxes, and then they keep the rest of the shares. Those are called uninformative insider buys because they don't really provide you with any indication as to where the company is going. So even on insiders, there is nothing that you can report or that you can find. So I went to my one of my favorite analysts, Morningstar. I went to the analyst report. The last one they had out was on January the 24th. They had Occidental at a fair value estimate of $49, which is even higher than TipRank's average target price of $46. Morningstar rates Occidental as undervalued. You can see the little blue line here on the graph, and it gives you on the legend, it tells you that the blue area is undervalued. So right now they feel that Occidental is still undervalued, but here's where the caution comes in, right? So you have a respectable analyst report from a respectable agency, Morningstar, saying Occidental is undervalued and it has a fair value estimate of $49. Now it's currently trading at like $39, so it's a $10 upside. But before you get too happy, we look at another analyst, and this is a respected analyst also. So what you have here is Stuart Glickman from CFRA is basically saying Occidental is a hold, and he's 12 months, Stuart's 12 months target price on Occidental is only 36. And we're currently at 39, right? So one of these guys, Morningstar or CFRA, is going to be right, and the other one's going to be wrong. And of course, this is the problem with reviewing this type of data and even reviewing analyst reports, because basically, if they're wrong, they can just, adjust the target price or issue a new report and say, well, things have changed because this is dynamic. So you can almost forgive them for doing what they do because this is their job. And if they say the average target price, 12-month target price is $36 and Oxy goes to $56, you can just adjust his target price. So it's kind of forgivable. It's almost like forecasting the weather. And when I say there's a 60% chance of rain and you say, well, it didn't rain, then I can say, well, there was a 40% chance it wasn't going to rain. So, either way, I am right. At the bottom here, what I did was I actually looked for a more global view. So what I did was I went into one of my international portfolios, my stock portfolios, and pulled up the analyst recommendation for Occidental Petroleum from an international site as opposed to a US site, maybe just trying to get away a little bit from the sort of US-centric or US bias related to the actual reporting. And you pick up a larger number here, so you can see based on the little numbers on the left side of the legend here at the bottom corner, I got 4 buys, 10 outperforms, 11 holds, and 3 underperforms. So if we add them up there, I got 21 plus 4 is 25 plus another 3, 28. So now I got 28 analysts, and one of them is saying underperform. Not one of them is saying sell, but certainly the majority of them are saying hold. I'm in the hold camp as well, guys. So that's where I am right now. And beyond this, it's very, very difficult to call because as I just said to you throughout this entire presentation, this is like a 50-50 kind of scenario where regardless of what I say. So if I had to make a prediction, maybe you can make a note of this and call it a prediction if you wish. We're going to blow through that $7 billion revenue number quite easily for the quarter. So 7.3, 7.5, sort of that's the range. And then on an earnings per share basis, a little bit more tricky, but because you don't know which of the non-cash entries on the balance sheet might impact you negatively, like some M&A type activity. They might have sold off some assets that might not be material, but it can certainly impact the earnings per share. So there are always things like that happen. But what we do know is this, that despite the sort of pullback in the price of oil, pullback, huh? We are still at $90 a barrel for West Texas Intermediate, which is the bulk of Oxy's revenue. And they are still generating, the last time I looked, approximately 1.35 million barrels per day of West Texas Intermediate. And the last conference call we had with Vicky and Rob, they were saying that their break-even point was in the high $30 range. Let's call it 40, which means that if you take that $90, and the $90 price, by the way, is a futures price, so it's for futures contracts for March. So in other words, this may more likely impact future sales than looking back towards Q4 when the price was significantly lower. But what this does for you is it gives you a little bit of insight into where you're going during Q1 of 2022. And now we're beyond midway through the quarter, and we've had an average WTI price of around $90 for 6 weeks. That's half the quarter is gone at $90 WTI, and those sales are in the book already. So it'll be really fascinating to see, firstly, what Oxy tells us about Q4 of 2021. Maybe interesting, but perhaps to a lesser degree, what the entire fiscal year 2021 looked like, kind of looking in the rearview mirror. But of course, remember that the companies get rewarded or penalized based on the last quarter, right? So this is a 100-year-old company, and if they have a bad quarter, we're going to get punished, and if they have a good quarter, who knows, we might get rewarded. But it will be sort of, from that point of view, a little bit less interesting to look at 2021. Other things that are interesting are potentially to see if the long-term debt is down to a level that sort of qualifies, and I use that term loosely, Occidental for investment grade status. So that'd be cool because it will certainly give the stock a boost. Maybe there's some news on dividends. If they start rewarding shareholders and the longs that have been very patiently waiting for Oxy to start rewarding the shareholders, if there's good news on that front, that'll be something to watch as well. So quite a few things that can dynamically change the mix for Occidental in terms of where we are today, and then on a go-forward basis, we'll see what happens. But much like you guys, nobody knows, right? We don't know what's coming. Of course, when I say nobody knows, the people who've been compiling the Q4 and fiscal year 2021 financial reports, they know, but they ain't talking to us right now. So guys, that's it for tonight. If you enjoy my content, please subscribe, and I look forward to your comments. Let's see if we can educate one another and see where we're going, and hey, be bold enough, make some predictions and see if you can get it as wrong as I do. Talk to you soon. Bye-bye.